This podcast is solely for the attention of institutional, professional, qualified, or sophisticated investors and distributors.
Hello everyone. Today we are going to talk about SFDR, Sustainable Finance Disclosure Regulations requirements, and how they impact CPR AM as an asset manager and your investments. The European Commission has released its Sustainable Finance Disclosure Regulation, SFDR, for the purpose of directing capital flows towards sustainable businesses and setting requirements for investment products advertised as sustainable. The regulation aims to harmonize transparency obligations and provide investors with information on the ESG features of financial products. What is the scope of application of the SFDR regulation? SFDR came into force in March 2021. It applies to all financial products, open-ended and dedicated, distributed in the EU, and to all financial market participants, insurance companies, investment firms, pension funds and fund managers, and financial and investment advisors. SFDR requires financial market participants to expand their investment policies with detailed disclosures on how sustainability risks are integrated into their investment processes and remuneration policies. They must also disclose any negative impacts of investment decisions on sustainability factors. At the product level, new disclosures are also required in prospectuses and mandates and on websites in the following areas: how sustainability risks figure into investment decisions, these risks being defined as environmental, social, or governance events that, if they occurred, could have an actual or potential negative material impact on the value of the investment. The main negative impacts on sustainability, which are the negative consequences of investment decisions on sustainable factors. Both aspects, sustainability risks and negative impacts, are the two components of double materiality in the sustainability of an investment. SFDR also requires compliance with the minimum social and environmental standards set down in international treaties. For example, financial market participants must do no significant harm to any of the environmental objectives. For example, for the environmental objective, climate change mitigation, the activity must not result in significant greenhouse gas emissions. Financial actors must also be transparent about the consideration of negative impacts on sustainability, which are the principal adverse impact PAI. This means taking into account 18 sustainability risk indicators and publishing the positioning of the funds on their associated metrics, such as exposure to fossil fuel or exposure to controversial weapons. SFDR also defines a new product classification. The SFDR regulation establishes three main categories called articles. Article 9, the most virtuous, covers products having a sustainable investment goal, in other words, an investment in an economic activity furthering an environmental and/or a social objective. Market participants must explain the product's sustainable goals, specify how they intend to achieve such goals, and assess the outcomes achieved. For these products, an improvement in the extra-financial indicator versus its investable universe can, for instance, be disclosed each year, and the indicator must be consistent with the product's sustainable goals. For example, a fund focused on the circular economy might highlight an improvement in waste recycling rate or in the volumes recycled by the invested company. Article 8 covers products promoting sustainable goals. They incorporate environmental and/or social goals, but without pursuing a sustainable investment goal, as long as the companies in which investments are made have good governance practices. Unlike products categorized in Article 9, no methodological explanation is required, nor any assessment and improvement of criteria, nor any transparency. Products not covered by these two categories cannot be presented as sustainable and are covered by Article 6. So, What is the challenge for CPR AM and more generally for asset managers? We are seeing a true shift in paradigm. Investors no longer look at an investment's financial aspects alone, but also at its impact on society. They want not just to give meaning to their investment, but also and especially to understand what purpose that investment serves. Regulation is a true catalyst and an opportunity for asset managers and investors. It helps them clarify, simplify, and explain what asset managers are doing in sustainable investment and puts forth a common language. Europe, and France in particular, are doing rather well in this area. France is mostly on the forefront in developing sustainable finance. There was its Article 173 of the Energy Transition Law passed in summer 2015, ahead of COP21, and its most recent example, the French regulator doctrine that entered into force in March. Even so, there is still some way to go. SFDR is still not finalized for all financial market participants, and new regulations will take over. Moreover, the entire ecosystem around data supply and mining is still under development and expanding very fast. Don't forget that until recently, there was nothing in this area. This is what materializes the actual outcome achieved in sustainable development. Asset managers such as CPR AM, who invested very early in this area through partnerships with data providers, will be well positioned to offer more transparency to their clients. Thank you, and talk to you soon for another podcast.
All comments and analysis reflect CPR AM views on market conditions and its evolution, according to information known at the time. As a result of the simplified nature of the information contained in this document, that information is necessarily partial and incomplete.